In Islamic finance and jurisprudence, the concept of insurance is a topic of discussion among scholars, and opinions vary regarding its permissibility, halal, or impermissibility, haram. Conventional insurance involves elements such as uncertainty, gharar, interest, riba, and ambiguity, mazir, which are considered non-compliant with Islamic principles. In traditional insurance, policyholders pay premiums to transfer their risk to the insurance company. This can be seen as a form of gambling or speculation, maizir, due to the uncertainty involved in whether a covered event will occur. However, some scholars have developed Islamic insurance models known as takaful, which adhere to Sharia principles. Takaful operates on the basis of mutual cooperation and shared responsibility among participants. In takaful, policyholders contribute funds into a pool system that provides coverage against specified risks. Any surplus generated from this pool is distributed among the participants according to pre-agreed terms. Takaful contracts are structured to avoid elements that conflict with Islamic principles, such as interest-based transactions and uncertainty. This makes takaful arrangements compliant with Sharia law. It's essential to consult with knowledgeable Islamic scholars or experts in Islamic finance to understand the nuances of insurance in Islam. They can provide guidance on whether conventional insurance or takaful aligns with Islamic principles based on specific circumstances and the nature of the insurance contract. Ultimately, individuals seeking insurance while adhering to Islamic principles may opt for takaful as a Sharia-compliant alternative. Insurance, as a concept, involves risk management by transferring the financial impact of potential loss from an individual or entity to an insurance company. In conventional insurance, a policyholder pays a premium to the insurer in exchange for coverage against specified risks. If the insured event occurs, the insurer compensates the policyholder according to the terms of the policy. However, within the framework of Islamic finance, conventional insurance raises concerns due to several elements that conflict with Sharia principles. Gharar, uncertainty. Conventional insurance contracts may involve elements of uncertainty because the occurrence of the insured event, such as accidents, illnesses, or property damage, is uncertain. Sharia prohibits transactions with excessive ambiguity or uncertainty, riba, interest. Conventional insurance often includes elements of interest, as the premiums paid by policyholders might generate interest-based income for the insurer. Riba, or interest, is strictly prohibited in Islam. Maisir, gambling speculation. Some scholars argue that conventional insurance resembles gambling or speculation because policyholders pay premiums without knowing if they will benefit or suffer a loss. This aspect conflicts with Islamic principles that discourage forms of gambling. In response to these concerns, Islamic scholars have developed an alternative form of insurance known as takaful, which adheres to Sharia principles. Takaful operates on mutual cooperation and shared responsibility among participants. Here's how it works. Participants, policyholders, contribute funds, known as donations or contributions, into a takaful pool. The pool acts as a fund to cover potential losses or risks faced by the participants. If a participant experiences a covered loss, they are entitled to receive compensation from this pool, subject to the terms of the takaful agreement. Any surplus funds in the pool after covering claims and expenses are distributed among the participants based on a pre-agreed profit-sharing or donation-sharing model. Takaful contracts are structured to avoid elements that conflict with Islamic principles. Instead of a conventional insurance model where the insurer bears the risk alone, takaful distributes the risk among the participants, fostering a sense of community and mutual assistance. Takaful is considered Sharia compliant because it eliminates elements of uncertainty, gharar, interest, riba, and gambling, maisir, that are present in conventional insurance. It's important to note that while takaful aligns with Islamic principles, individual interpretations may vary among scholars, and different takaful models exist. Muslims seeking insurance coverage while adhering to Sharia principles often consider takaful as a halal alternative to conventional insurance. Consulting with knowledgeable Islamic scholars or experts in Islamic finance is advisable for comprehensive guidance on insurance within an Islamic framework.